Okay, welcome everybody to the Aftermarket Monday. Thanks for the heads up, Andrew, on no audio, because I was really getting going there. Anyway, this is Dennis with the Active Trend Traders. Welcome to today's webinar. Remember that all materials we do present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Our objective with this webinar is to, one, provide timely, actionable intel that we'll double check again on Friday to see how that intel worked out, but do a real quick market review, stocks and ETFs that are setting up, and anything else that we have a chance to focus on. Eric already got one request in to double check on WP. And so also by having these webinars both on Friday and Monday, it's meant to help contribute to helping traders, especially the premium active trend traders, be patient and wait for the rhythm of the market to set up for them. Here's what we're looking at, basically. Looking at the market today. One, earnings and seasonality. Earnings, of course, Apple reports, I think, after hours tomorrow, and we'll see how that goes for Apple. Both the IWM, or the Russell, and the NASDAQ 100 was off today. Consider this is the end of the month. It is not the end of the quarter, so we're not really worried about a lot of quarterly window dressing. But help understanding how the historic effects of both August and September, let that basically help you plan your strategies moving forward. August tends to be the most volatile month of the year, historically, going back in time. September tends to be the worst performing worst performing month of the year, and that goes back for many years historically. Typically always returns a negative return to the month of September. But the blessing behind that is that both of August and September guide us into the mid part, or the first part of October, to the mid part of October, sometimes the latter part of October, when we start looking for those year-end bounces, and those can be quite healthy. So we're going to take a look at Nugget today, TSL, Tesla, and NVDA. Comparison between IBD and LBU. I just want to continue to hammer that home. IBB is the non-leveraged ETF for the biotechs. LBU, the 3-time leveraged index for the biotech. And then HQY, TCBI, and SCX are stocks that are looking like they may be setting up for a real quick earnings run. We shall see. Let's see what else I got here. Okay, we'll come back to that. And let's just make a run through the entities today. Okay, the spiders. And I'm not going to go directly to the indexes themselves, to the SPX, the NASDAQ, and or the Russell. I'm just going to take my review off of this, off of the non-leveraged ETFs, to give you a flavor for what we're looking at. Okay, one, price jumped up into resistance that we identified over the weekend and going on to Friday, and then has rolled back over. This trend line that we put in place, those of you who watched the on the radar last night or this morning know that this trend line I put in here yesterday, as long as that stays intact, then this little slight uptrend is still intact. However, once that's broken, we're probably looking at a return back to the 245 level. And so if you're trading strategy number 3, which is the growth and income strategy, selling a SPY call put, a call option on that expires this week, would probably be in order. So I'm going to take, basically, if we drop tomorrow's high, or tomorrow, if we drop today's low by about a nickel, I'm going to go ahead and sell probably the 246 call combo. I may drop it down to the 246.50 call combo. For the premium members, you'll get an alert on that. Longer term, the Weeklies have turned down a little bit. TSI rolled over. Momentum pointed down. Market forecast momentum pointed down. Plus, we have a really nice, and I'm glad we introduced the market forecast, because the other thing we have going here is, look at, it gives us another view on potential negative divergence in those shorter term momentum lines. And so that's gives us an additional clue that we didn't have before. Moving quickly over to QQQ. Again, QQQ holding above the 20-day moving average. However, we had a bearish engulfing that encompassed several days. That was last Thursday. A little bit of a pop-up on Friday, and now we've reversed back below the 50. TSI looks to be in gear to the downside. Longer-term momentum in gear to the downside. We had a three-line market forecast in the upper reversal zone, or the bearish reversal zone, and so we may be getting a pullback. What can we expect in the pullback? Well, we've got support down there at 142-ish. And then ultimately, we've got some support down here at the 140 level, right at the 50-day moving average on the Qs. Again, Qs tend to be a little bit weak going into the August-September timeframe. IWM. And we did have a mixed market today. Just be aware of that. The Dow was up. S&P was down a little, NASDAQ was down more, and then IWM, nice sell-off back down into this, into around the 50-day moving average. And the thing I'll highlight to everybody is, when we get a crossover in the TSI on IWM or any entity, go back in time, look at the history. What tends to happen? You'll get probably a couple of different items you can expect. One, a real nice pullback into stronger levels of support and resistance as identified by the bottom of the Keltner channel, a moving average line, and then a roll back up. Or you'll get a milder pullback into a level of support, again, the moving averages, and then a rebound. And the one that happened about, a little bit over a week ago, we get the rollover, and it appears as if we're getting a nice maybe a little bit more severe of a pullback, but just, keep that in mind. Again, because we are in a nice uptrend, we're looking at any type of a pullback right now, a pullback into a buying position. And what will I be buying at the right time? I'm going to be looking at TNA, 3-time leverage ETF on this. And again, I like it at 56. I would like it from a weakness standpoint or a bigger rebound if it was down here between 54 and 55. And so that's where I'll put my triggers and my alerts to go off if I get down to that level. And then the requirement then is just to wait and see what happens. And so, okay, let's click at Tesla. Tesla had a little bit of a sell-off today, as you can see. It too rolled over. It has broken this little uptrending short-term uptrend line here. We move back down below the 50-day moving average, down almost to the 100-day moving average, where it in fact tried to make a little bit of a rebound. I'm not doing anything with this until Wednesday, when I will sell a call and a put against it, and the alerts will go out against the long-term leaps that we have, and the alerts will go out to the premium members on Wednesday prior to the close of the market. So it reports on 8/2. So here's the other one I like, NVDA. Okay, NVDA found some support right there at the 20-day moving average, did a little bit of a rebound, but we do have some, a couple of things working against NVDA. One is you've got negative divergence here, negative divergence here. We had some negative divergence here on the market forecast. we have earnings coming up on the 10th, which the 10th is Thursday of next week, and they report after the market closes. And so what we may want to do is just look at a couple of different things, way to play this. We're currently short a call, a 165 and a 162.50 call. If it goes back above today's high, I want to close those positions out. One of them be profitable, the other one have a small loss, or I want to close them out when they get about where their value is about $1 to 50 cents. I also want to be prepared for going into earnings next week. If I can get a good bounce off of a intraday chart, let's go over real quick to the intraday. And here's the hourly chart on the intraday. And I'm watching this because it's closed back down below the 50-period moving average on the intraday chart, but it's, which is the 8-day moving average. So we're below the 8. However, it is finding support about that 160 level, may drop a little bit lower than that down to, this lower support about the 157.50 level, but I'm anticipating a little bit of run into earnings. And so if we get a stability, if it becomes stable at 160, I would look at buying the 165 or the 167.50 call that expires Friday of next week. In other words, but I would be selling that or getting rid of that position the day of earnings, or when it hit a 50 to 100% return on how much I bought it for. How much could we buy those for? Let me go over here and we'll take a quick look. Let's see here. Okay, let's go to NVDA. And what we'll be looking for in NVDA, we'll be looking for the volatility, the implied volatility to start moving up on those. Now I'd be looking at buying the 167.50 on a retreat back down to about somewhere between 160 and, at about the 160 level, where I should be able to get into those at about how much? Probably, let's take this, let's reset this, make this tomorrow. Let's go down $1.50 or go down $2.50. And I should be able to get into those at about $4.29 if it pulls down to that amount. And then I would anticipate selling it when it gets to $6.50 or all the way up to about $8.50. I would look to sell and get out of that position. And make sure I was absolutely out prior to the end of earnings. Okay, looking at, so Apple, I am not trading Apple, but because we do have earnings tomorrow, we'll just take a real quick look at it. As you can see, 8-1 after market. It had a basically kind of a nasty sell-off on Thursday of last week, and doesn't that look a lot like the NASDAQ? And so it shows the effect of Apple on the NASDAQ. CSX, I'm looking at this. CSX, it has gotten itself down into a very oversold condition, but it's at a level of support, which is about the 49 level. However, is not reversed back up out of that. It has basically done a sell-off on high volume, and so this may be just a formation, a consolidation pattern to take it lower. But we have to, keep an eye on it because it is getting a 3-line cluster on a daily chart on the market forecast. So I'm not ready to call this one yet as saying, hey, I want to get into this, because I'm not sure I really do. A couple that I do like is HQY. but it sold off today too also. So that's one of the things. It's a good learning experience. Is it came down Friday, hit at a level of support at the 46.84 level, and so if one was to apply and jump into a trade either at the 46.87, 46.50 level, and as soon as the low on Friday was broken, that should have been your trigger to exit the low. I would give it 10 to 15 cents below that low, and that would say, hey, I'm out of here because it is not working the way it should have, which would have been a rebound off that lower level. What we may be getting is, again, it's showing no sign that it wants to reverse yet, but I still like the entity. It's a good stock on the IBD 50. CSX we talked about. TCBI has already had earnings. This looks a little bit better than the other, and the reason for that is it's holding above its 50-day moving average, 100-day moving average, 200-day moving average. So this, since it is trending up and it's holding above those moving averages, will basically potentially be a better potential trade going forward. So, okay, guys, that basically covers what we wanted to cover for today. Let me double check the screen. Got all that. LABU. I will show the. I need to talk just briefly about Nugget. Okay, I'm waiting for Nugget to get back down. Just to be, it is running into resistance at the 33.68 level. I would like to see a retreat back or wait for the moving averages to catch up with it. But somewhere between 32 and down here at about 31.60, 31.75 would be a good place to trigger in with Nugget, and that's to take advantage of the seasonality run. IBB. Watch IBB to see how it's going to pull back. We had some negative divergence here, which is a sign of weakness in the entity. As you can see, it rolled over and maybe going to drive lower. But as you can see, it's coming down 318, and which 318 associates with this level of breakout resistance, which now becomes support, and it's holding there. But what happens when we switch over to LABU? LABU. If there was a direct one-to-one comparison between IBB and LABU, you would expect the charts to look exactly alike. And as you can see, they look similar, but not exactly alike. And the reason for that, as you can see, they look very similar, but not exact. The reason for that is because of backwardation and contango that is a result of the type of derivatives that they have to buy for LABU to match a 3-time leverage ETF. So you can see this has got a little bit of a slope upwards. IBB has basically, so also a stronger upward slope. So which one is the best? Well, IBB provides a purer signal because it has less variables that go into making up its price action. So like Mike Traeger, what he'll do is he'll take his trading signals off of IBB and then go from there. And so it's very simple to do. Is you just basically say, okay, if let's say you wanted to trade IBB, I'll give you a real quick example, breaking above that trend line because you think, okay, that's reversing the trend, and so tomorrow that's going to be at about $320. Well, I might say, okay, if it gets to $321 or $325, $20.55, get me in to the LABU trade, and that would be your trigger. I would basically set up the conditional order saying that if IBB goes above $320.55 to buy a certain amount of LABU at market. And that's the way I would use my purer signal to trigger my other signal. So, okay, guys, with that, we'll call it a day. We've gone about 20 minutes, so I'm really trying to stay with that 10 to 15 minutes. I hope that you have some ideas now for what you want to be trading this week. And we'll be talking to the premium members on Wednesday night. I've got a good session planned for training for hidden trigger opportunities. So anyway, with that, have a great afternoon. God bless everybody. Bye-bye.